Hello everybody, Steve Griffiths here, developer of the MT Predictor software program. I'd like to welcome you all to today's MT Predictor video, and as we start, I'd just like to remind you all of our risk disclaimer, and in particular that all examples in this trading room should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and trading purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand, but more importantly accept that losses can and will and do unfold. No matter what trading approach there is, you always will have losing trades. Just want to check you can see the chart and the risk disclaimer, and you can hear me okay. And because I've got a new microphone here, so just want to check that you can hear me okay. That'll be great. Okay, we'll take that down. Yeah, so we're going to try and have this training just before the markets open from now onwards. The only reason I brought it back an hour was basically due to lockdown here in the UK, and when our schools closed, basically I had to be a part-time teacher as well as this for our kids. So I had to do schoolwork as well as all the stuff here, so it just didn't work being at this time. It had to be an hour later, so that was the only reason, basically, because of lockdown. So yeah, so we're back to our new time here now. Right, where should we start? I think what we'll do is we'll start by answering a few questions. Had a couple of questions come in from a current customer. Just want to bring one of his charts onto the screen there, if you can all see that. And basically his first question was, if the MTP trend goes red then black again, is it okay to have a VS or a sell setup? The answer to that is yes. Basically we're looking for sell setups to be confirmed by our MTP trend. Remember, we use our DPs first and foremost. Our MTP trend is only a secondary indicator just for a bit of extra confidence. But yes, it doesn't matter if it's red or black. It just basically has to be not blue. And it doesn't matter if it's gone from red to black. So that's perfectly valid. That's okay. His other question, or another question, again, I'll pull one of his charts over onto the screen. And again, the similar kind of thing is that he deemed by his larger degree analysis that the larger degree trend was up, and he was asking about this TS3 buy setup because it came in when the MTP trend was red. Now my answer to that is, if you're sort of new to MT Predictor and you're not confident, then ideally you want to have your large degree trend as deemed by your DPs and your MTP trend color, like this one here, agreeing. In other words, ideally these should be blue. So if you're like a new trader or a bit unsure, then you probably have to give that a miss. If you're more confident and you're a more experienced trader, well then you can decide to perhaps go against the MTP trend, as long as you have a clear picture on your higher time frame DPs. But then, because you know you're sort of against one part of the analysis, you probably bring your stop to break even a bit closer. So if you're more experienced, do that, but bring your stop to break even a bit closer. But if you're not so experienced, you probably want to have the two agreeing, if that makes sense. Remember, we like to have a clear picture. Just doing something here. Right, that's absolutely fine. Another question he had was, again, on Forex. I know this is not a Forex chart. In fact, actually, let's skip over to Forex and actually have a look. This is the setup he was looking at there earlier, and I'll go over this in a minute just to show you the basics of MT Predictor. But one question he asked was about shorter timeframes on Forex. I mean, we tend to look at daily, hourly, and 4-hourly charts on Forex, and he said, can you go down to the shorter timeframes? The only problem is if you try to come down to like a 5-minute chart on Forex, there's, the bid offer spread isn't great. There's a lot more noise, and it's just a lot harder with Forex charts, particularly to try and get good analysis going on shorter term charts. So for Forex, I'd probably suggest sort of slightly longer term charts. And then again, he also asked about whether you can do setups on what he called the overnight session because he's based in Australia. There isn't really an overnight session with Forex because they trade basically 24 hours a day. So as long as the volume's there and there's good liquidity, then you can take those setups. So hopefully that helps answers those questions. So let's start with this chart there. I will come back and have a look at that USE Mini, the NQ, in a minute, but probably here's a good place to start. So I'm just going to clear all this lot off and go back to the 4-hourly chart. So is MT Predictor basically a black box system? You can see we have automatic setups. We have history triangles here as well. We have an MTP trend color. So do we just simply take our setups, say in the direction of this trend, and that's it? Well, the answer to that is no. The reason is because markets are random half the time. This is so important to truly understand, is that, and I think it's why so many traders get in such a mess over the years, is that they try to have a clear picture all the time. They just don't seem to understand when their picture, when things just don't seem to come together. And many years ago, I decided that the reason for this is half the time the markets are basically random. They're not, they're not making any clear, clean patterns. So the best thing to do is to only trade or do analysis when the picture becomes clear. So how do we define when the picture is clear? Well, for this, we go to a higher time frame chart. We look for a time frame between 3 and 5 time frames higher. So if you're on a 4-hourly chart, you'd probably go out to either the 8-hour or the daily. If you're, say, trading daily stocks, you go out to the weekly. If you're then trading, say, a 3-minute E-minis, you'd go out to the 15-minute. And we'll have a look at those shorter time frames a bit later. So I just want to go back in time on this Euro US dollar, back to here somewhere. So what do I mean by placing our DPs on? Well, for you guys who've been with us for a while, there are recordings of these webinars that are in the customer section of the website that shows you which particular pivots to take. And I won't go over the detail of those again today, but you see here the market is on the process of going up. So we'd take the last recent swing pivot high. We'd right mouse click, we'd do a decision point. Here I'm going to only be using our typical DPs. I'm not going to be using our maximum ones at the moment, just our typical ones. And what we're looking for is to see what the market does if, I won't say it will, I say if it gets up to this level. If I turn training mode off, you can see that's indeed what the market did. The euro went up to that level, backed off, and then came down. So what we're looking for is we're looking to see whether the market is doing what we anticipate. It's a bit like fishing. You put your rod in and see whether the fish comes to you. If it's doing what we anticipate, then we deem the picture's clear or clearer. So how do we then do analysis on this? Well, what we're looking for is to see whether we get a setup at this level or after this level if the market is then reacting as anticipated. So here, as this was a daily resistance, we were then looking for the market to be making sell setups. You can see here we got a VS sell at our higher time frame resistance. So this would deem to be a clear picture. And if we actually go to that's what it looked like at the time. You can see this is the example we looked at earlier. Our MTP trend was either red or black. So the two things were telling us the same thing. We're at higher time frame resistance. Our MTP trend color was telling us the same thing. This would be a good setup to take because the picture is clear. We then place our analysis on. That would give us our setup. Lynn, yes, we added the new maximum DP in a while ago. If you're using the NinjaTrader add-ons, there's a short video to show you how to add those in. If you just drop me an email or drop support an email, we'll show you, point you to that video. So this would be deemed as being a good setup. If we turn training mode off, you can see the market has indeed declined back down here again and is basically just sort of chopping around here in sort of like a random phase at the moment. But the point being is at the time, this looked to be a clear picture. Of course, we get losing trades because sometimes the market will give us a clear picture and then it will go back up again and stop us out. That's why we have our stops in. That's why we keep our losses small, and hopefully over time, the market goes with us. So we have profits that are large in relation to the losses over time. But this is the basic concept of MT Predictor, is we're looking to place our DPs on our higher time frame chart in advance. We're then looking to see with the market on the time frame we're following then reacts as anticipated at those higher time frame support and resistance areas. That's what we deem as the picture becoming clear. I think most of the people who are in today are fairly current MT Predictor customers who've been with us for a while, so hopefully that should be all clear. But is there anything that you'd like to ask on that before we perhaps go out to have a look at another example, particularly on our Wave 3 or W3 setup that unfolded rather nicely on the NQ yesterday? Right, I think everyone's happy on that, which is good. Interesting, while we're on Forex, I hope you all caught the decline on the pound, because the pound is against the dollar has gone down nicely. But just look at this. If I go to the daily chart, just look where the pound came off on the pivots. This is what I mean about how powerful these pivots are. Now, remember for the training we did a few weeks ago, talking about which pivots to use, the last swing into a high or low is so important. Did you see this last pivot low here back in March time here? This, can you see this? This is the last swing into the low. So if we right mouse click off this pivot high, this gives us an area of resistance. Now this resistance has been on the chart for months and months and months and months. But just look where the pound went up into before this sharp fall over the last week, as basically the negotiations get into trouble with the EU. No surprise there, but isn't it amazing that we've had this resistance zone on our chart for such a long period of time, that's where the decline started from absolutely perfectly. And this is why it's so important to, when a market is moving up like this, to always be aware of the last swing into the previous high or low. So I thought that was just a good one to be wary of. Right, let's go over to the NASDAQ. Just want to have a look at this yesterday, because this was an absolute corker. I hope you all caught this one. By the way, I hope you all on the E-minis. I hope you all up onto the December contract, the Z contracts. They roll forward last Thursday stroke Friday. You should all be on the December contracts now. But this was a really interesting one yesterday. So this is a 3-minute chart. So we do exactly the same concept. I'm going to go to the higher time frame, which would have been the 15-minute. I'm just going to go back before yesterday even opened to there. And here we go. We place our DPs on the chart. They're on the chart in advance. This is the last swing into that low. Do you all see that? There was the major low. Interesting, where did that low came in? Well, there was that previous pivot. Do decision point. You know, was there any surprise at all about where the low came in on Friday? Just look at that, look, right at our typical DP support zone. So that was absolutely beautiful. A nice sell into that low on Friday as well, but I'm not going to talk about that today. So that came in beautifully there. But here is a rally off the low. So the pivot we use is off the last swing into that low. You all see that? That's the last swing into the low. So this is the pivot we'd use. We right mouse click, we do decision point. This was an area of resistance on our chart before yesterday even opened, before it even started. If I turn training mode off, look what the market did. Opened, rallied, went right up into that DP resistance zone before it then reversed back down again. So this is the kind of thing we're looking for. We're looking for when the market is doing what we anticipate. It doesn't do it all the time. There are quite a few times when the market doesn't do what we're anticipating, and that's the times we stand aside. It is so important to understand that when the market is not clear, you stand aside. So now let's go down to the 3-minute chart and just look at this. Here's the 15-minute resistance. Comes up, hits that DP, comes down, give a buy setup. Our MTP trend is grey, so it shows it's in the process of making a reversal. So what do you all think about this TS3 buy setup here, this one? Do you think that would be a good one to take? What do you think? Bearing in mind, we were coming off this resistance level absolutely perfectly. You know, would you prefer to go to like that TS3 buy setup? No, exactly. It's not a good trade. So what unfolds a bit later? Well, this is what we get here. We get a, if I do a training mode, just to jump back, this is what we got, a TS3 or a TS4 W3 wave 3 trade setup. But you see how this was now in the direction of the new large degree trend, because this is resistance. We were coming off resistance, therefore the large degree trend was down. Our MTP trend was grey. So do you see how the two things were telling you the same story? The reversal was nice, our MTP trend was great. We right mouse click here, we do analysis. This would then give you a sell setup. So first of all, before I go into why this is a particular W3 wave 3 trade sell setup, do we all again understand what we're looking for? Is that we're looking for the markets to make reversals off our higher time frame support and resistance. We're looking for then the MTP trend as a secondary indicator to then confirm that by basically either being black or red in this case, because we're looking for a sell setup. So this is what we're trying to look for. There's our target at the typical wave 3 WPT. Here's our position sizing. Remember, you can have different contract sizes. So if you had a 10K account, obviously that would be risk exceeded, and you'd probably have to go to have a look at the micro E-minis. But if you had a 2% risk on a $20,000 account, that will allow you to sell one contract. If you're wrong, or rather I should say when you're wrong, the losses are kept small at what we call 1R or one risk unit. If we're right, then we hope over time the profits are large, not just in dollars, but in risk reward units. If I turn training mode off, the market went down to that level quite nicely and hit that target very well. By the way, if you are managing this as per our standard guidelines, our MTP trend, which is our indicator down here, is what we call strong when it hit that level there, i.e. here it's strong because it was beyond our grey strength band. This is when we use the strength bands. If it's strong, we deem the market is going to go further, i.e. the market's strong. So that's where we use our ATR stop, our red and blue stop dots. So that's why we trail the market, we'd trail it a little bit further, and then we'd be stopped out about there for a 6R profit. Yeah, Sylvian, yeah, the minimum wave C, it doesn't have to touch it. It has to be just close. That's what the math says. It has to be just within a whisker of the levels. So that's a very nice trade indeed. So let's have a look at why this was a W3 or wave 3 trade setup. So what is a wave 3 trade setup? Well, a wave 3 trade setup is where we're trying to catch the end of the wave 2 to catch a wave 3. Let's have a look at, if I place the major pivots on, we can see this in a bit more detail. By the way, for you guys who are using NinjaTrader, exactly the same setup in NinjaTrader. There it is. That's on the MNQ. There it was, a W3 trade setup there. Oops. And there it is on the normal NQ as well. So exactly the same trade setup if you're using NinjaTrader. Just going to go back to our standalone here just for a minute. Right. So what do we mean by a wave 3 trade setup and trading the wave 3? Well, you don't have to be an Elliott wave expert, but what we're looking to try and do is we're trying to trade the wave 3, which is this one down here. If I right mouse click here and do Elliott wave major, you can see there it is labeled a 3. To trade the wave 3, we have to pick the end of the wave 2, which is this one here. Now, what's nice about wave 2s is the most common pattern in a wave 2 is an ABC correction. So we're looking for an ABC correction into this wave 2, which is exactly what we've got there. Do you see that? We're looking for an ABC correction into our wave 2 to then trade the wave 3. The wave 3 is typically the strongest and longest in a completed 5-wave sequence. That's why we like it, because it typically has the largest profit potential in relation to the smallest initial risk. Now, what's interesting about Elliott wave is that traditionally it's taught that if you know where you are in an Elliott wave sequence, you know where the market's going, because the markets basically fit in with patterns 100% of the time. But of course, what I said at the start of the webinar is that markets are random half the time. So basically what I did is took Elliott wave and said, well, actually, I don't believe that it can be right all the time. I'm going to look at it with the eyes of it being random half the time and only a clear pattern half the time. So this is actually a great example, because if this is a nice 1, 2, 3, what the market should have done is gone up to a wave 4 there, and then it should have gone down to a wave 5. As you can see, it didn't. So of course the market here then broke down the pattern and didn't work. So this is what happens with Elliott wave traditionally. It stops working so often that it becomes virtually impossible to trade. That's why so many people basically throw it in the bin, because they just don't like the idea of it, because they're using it with a view to then be able to know where you're going 100% of the time. That's the big mistake. So let's have a look at this with the eyes of basically understanding that markets are random half the time. So let's say, right, okay, we're looking for this particular pattern. So we're looking for an ABC pattern into a wave 2. Whoops. To then trade the wave 3. So we're looking for this wave 2 here. We know that a wave 2 is the first correction in a new trend. So of course, then you have to then say, right, okay, if it's a new trend, how do we know where the previous trend finishes, or how do we know where the new trend starts? In other words, how do we find the start of the trend, i.e. this point here? Now, of course, with standard Elliott wave, this would be at a previous swing or the previous pattern, or all that kind of stuff. But what I did is I said, right, okay, because the markets are random half the time, I'm saying, right, I'm going to draw a line in the sand here. I'm going to say, all I want to do is I want to start the sequence when the pattern or the picture becomes clear. And of course, as I've just said, the pattern becomes clear when we get the market making a support or resistance or reversal, in other words, at our higher time frame support or resistance, our DPs. So can you see how suddenly Elliott wave becomes a lot clearer, in that effectively what we're doing is where the cursor is, we're saying, right, at this point, the market has made a reversal of our high time frame resistance. So this is when I'm going to open the book, effectively. This is when I'm going to start looking for the Elliott wave sequence. So in other words, I'm saying, right, the market is now starting to become clear here. So now for our wave 3 trade setup, I'm going to move forward and say, right, I'm looking for an initial move, which is wave 1. I'm then looking for an initial correction to that initial move that should unfold as an ABC, which it does here. If that all happens, then I'm saying that that is probably the end of a wave 2. Therefore, I'm looking to anticipate that the move off that wave 2 is a wave 3. So therefore, I'm looking to do this trade setup into at least the typical wave 3 WPT. So looking to take this chunk of the market out. Once we come out of the trade, we're saying, well, actually, job done. We don't care what the market does after that. It can then go random, because we don't really care, because we put money in the bank, we're off down the pub or whatever you're doing, have a meal with your family. It doesn't matter. So this is why suddenly my isolation approach to Elliott wave has basically come into existence, because that's what we're looking to do. We're looking to look at the waves and the patterns in isolation when the pattern becomes clear at the higher time frame support and resistance. So do you all see that suddenly this gives you a sort of a frame or a framework to then be able to do your analysis, to then be able to cover the end of the wave 2, to then have the trade that is the strongest and longest in a completed 5-wave sequence. In other words, the best Elliott wave trade there is. I still find it amazing that so many Elliott wave people haven't really twigged this. So I'm guessing that's why MT Predictor is quite unique, and that's what we've been doing for, well, it was just our birthday last week, actually. So MT Predictor as a company has been going 19 years now. So we're now in our 20th year. as MT Predictor software. So that's not bad, is it? We've actually been going and actually been around longer than NinjaTrader, believe it or not. So suddenly, this then becomes a good trade setup. It's one of my favorite trade setups because, as I've said, the wave 3 is typically the strongest and longest in the completed 5-wave sequence. So when you're wrong, the 1 hour loss comes in, but when you're right, hopefully the profits are large, not just in dollars, but in R units. In this case, 5.5 R there, or if you're trading with the ATR stop, to 6 R there. So does that actually make sense in what we're looking to do, and particularly with a bit more explanation of what the W3 or wave 3 trade setup is? Yes, Lynn. The VSA or the volume or the VS, just the volume spike, is my other favorite trade setup because that comes in as professional money. So yeah, that's exactly right. That's my sort of second favorite. So the two favorite trade setups I have are the W3 because it has a large profit in relation to small initial risk. And the other one is the VS because it comes in on the professional money. You tend to get a big move on those. Not saying that you shouldn't trade any of the other trade setups. If we go back, perhaps on the ES from the, is it yesterday? There was a nice TS1 sell coming down there into, that was actually 15-minute DP support. So if I look at this, if I put the 15-minute out for yesterday, this is a good example of the new maximum DP. So if I go back to see how yesterday, Friday on the ES, it came down to the maximum DP there. So yes, you do get other good setups at other times, but my two favorites are definitely the W3 and the VS sell. So are there any questions on the W3 trade setup and what it means, how to find it, and how we basically draw a line in the sand for our Elliott wave analysis? And we start when the picture becomes clear. In other words, when we get a reversal of higher time frame support and resistance, then we're looking for the initial move off that high or low. We're then looking for the initial correction to unfold as an ABC to then trade the strong move that then usually follows off that particular reversal. So are there any questions on that while you're all here at the moment? I mean, these webinars are the time to answer questions. Actually, one question I forgot to answer from the previous, from the guy who's asking questions right at the start was, and it's a question I get sometimes actually, is that we have the different colors on our MTP trend, but does it matter whether the color comes above or below the 0 line? In other words, here you see there's a red MTP trend above the 0 line and a red below it. Here there's a blue below the 0 line. Here there's a blue above the 0 line. The answer is it doesn't matter. The MTP trend color is based on the move from the major DPs to the major DPs. So if I clear everything off here, and I just go to the 15-minute chart, I just take this all off, come back to the 3-minute chart. What the MTP trend color here does is works off the major pivots. So you can see here our connected major pivots. So if I put that back on, there's the major pivot there. So as the market moves up to that major pivot, it's going blue. As it makes a reversal, it then goes into gray. As it starts to come back down, it then goes red as it then comes off the major pivots. So that's what the MTP trend color is. It's just the move from and to the major DP levels on your current chart. It's not whether it's above or below the 0 line, if that helps. So if you're a NinjaTrader, there's exactly the same thing. Just clear it all off. So there's our the trade setup there. If I go out to the higher time frame level, let's put the DP on exactly from the same pivot. There it is. So there's your higher time frame resistance. We then come to the 3-minute chart. I'm just going to place the analysis on that chart there, on that pivot there, and there's exactly the same setup with in the NinjaTrader. TJ, there's volume down the bottom there. See, there's the volume down there. If you're in standalone, the other tab I have both open there is volume. So you can actually see the VS bars coming in here. So for example, if you were short of that one down there, you saw that that bar there was a really high volume spike. So maybe you want to bring your stop a bit closer. So yeah, there's volume there as well if you wanted it. Right, so are there any questions on that, or indeed anything you'd like to ask for the next sort of 5 to 10 minutes of the webinar? Just to let you know about our new data feed that we're looking at is basically working with TradeStation. This is an internal beta copy I'm looking at here. So we do actually have a new connection into TradeStation. So this is the web API connection. So it will take data from TradeStation into our standalone version. And that's really good actually. Basically because in TradeStation you can get data for free. So once you've got a funded account with them, yeah, you can get the data for free, and also if you're trading futures, the exchange fees for free as well. So that's really, really good. So rather than having to pay for data and exchange fees, you can get your charts in our standalone version basically for free, as long as you do about 5 trades a year, I think, with TradeStation, or have a $2,000 minimum monthly balance. But only doing 5 trades a year with them is nothing. If you don't, then I think it costs $50 a year in inactivity fee. So even just for paying $50 a year is certainly a huge, huge saving on any of the real-time data feeds, bar chart or IQ feed out there as well. So, once we've got this working well, we're just testing a new version in-house at the moment and ironing out a few minor bugs we've found with our initial release. So I'll let everyone know all about that. But, as far as I can see, it's a bit of a no-brainer, really, if you're trading futures, to be able to get free data in our standalone version. So hopefully that helps you all on that. And if you do like it, don't forget to donate a little bit of money to MT Predictive, our donations page, because obviously programming costs us a lot of money, and I'm not charging anyone for the upgrade on that. So it just helps us to get a bit of money coming in to pay the programmer. Lynn, I'm not going to answer that one in the room or emails. I'm sorry. I was asked about trading gold with shorter time frame charts. The general guideline is if there's good, clear patterns. Let's have a look if there's. So this is crude oil on an hourly chart. Some nice sell setup on the way down there, and gold on an hourly chart, gold on a daily chart. What's crude oil doing down at the 37 level? So basically, you really just have to look to see whether there's enough volume. If there's enough volume and there's good liquidity, then you can trade on the slightly shorter time frames. But just be careful if you're trying to go down to really, really short time frames with gold and crude. They're not as good as the E-minis for really, really short time frames. But just be sensible. There's no really hard and fast guidelines on exactly what time frames to look at. Right, so where are we at the moment? So let's just take everything off here. I'm just going to take the pivots back down on that. Where are we at the moment? So let's go out to a higher time frame on the 15-minute. Take a DP off the high there. interesting enough, we're basically in at the maximum DP on the NQ there. So we'll see whether that actually makes a reversal or not. Where are we on the ES? Let's go out to the 15-minute chart. Take everything off. Just place a DP off that previous pivot. Again, we're at the maximum DP at the moment, so we'll have to see what happens and if there's any reversals coming in there. But nothing as clear as the last couple of days. And of course, this is again what you have to keep in the back of your mind, is if you've had a couple of good days with some couple of good setups, and we have, particularly there's some lovely setups Friday and yesterday on the ES, on the NQ have we seen, and on the YM I think as well. That wasn't the YM, it was the NQ on Friday. The NQ on Friday as well. There's another lovely TS3 cell set up there on the way down. Losing trade first. Remember, losses can and will and do unfold. So I place analysis on here. Whoops, analysis, missed that. Then, you know, this was a losing trade. And it's important to understand that losses can and will and do unfold. No matter what trading approach you take, there always will be losses. I mean, interesting, this was a big initial risk. You wouldn't probably be trading that on the NQ. You'd have to probably trade it on the micro NQ. Never know how to say those, mini micros, but you know the ones I mean, the M NQ. So there would have been a losing trade. After the loss, we then got another trade setup come in. They came down to the first target. And indeed, if you're letting it run into the higher time frame support, we've already seen this, haven't we? That there's the last pivot low. I just love it when this happens. I love it when the market comes down and makes a reversal right at our DP level of the previous pivot. So when we go down to the 3-minute chart, I mean, wasn't that absolutely beautiful there? Coming down to here, rather than trying to take it at the first level, wanted to run it down as your more experienced trader into the higher time frame support, and that increases your profit nicely. But look where the low came in, right at our DP support. So the point I'm making is that after you've had a couple of days where the markets have basically unfolded really nicely, in other words, some clear patterns, because of the markets going in cycles, you will then tend to get a random phase. So in other words, it's highly likely that the next couple of days are going to be hard with random patterns. So you're not going to get any good setups. So that's I think is also hard to do, is that after you've had the market giving you hard patterns or no clear setups for a while, to then anticipate that the cycle is going to come round and then start to look for good patterns. It's like a wheel, as I've said before. It goes around in cycles. So after you've had some good clear patterns, anticipate that it's going to be harder. After you've had some hard patterns or less than clear markets, anticipate it's going to become clearer. You're always trying to assume the next thing that comes around in the cycle, and hope that helps. Right, so if there aren't any more questions, and I think they're all drying up now, hopefully that's been a good webinar today, looking at a few questions from Mohan there. So hopefully you've enjoyed seeing those answers, and also having a closer look at the W3 or Wave 3 trade setup in there, exactly what it is and how we look to see it unfold at our higher time frame support and resistance, and then also a bit of review on the markets over the last couple of days as well. Just remind you again that if you're using NinjaTrader, exactly the same approach with NinjaTrader as we've seen. You know, exactly the same. Doesn't matter whether the chart is on NinjaTrader or whether it's our standalone version. You know, the analysis is exactly the same on what we're doing. So I hope you've enjoyed today's webinars. So have a good trading week, everyone, and we'll be back to do it all again in a week's time. But if I get a new version with this TradeStation data, I'll let you all know when the new version is ready to download. But otherwise, there's a link to open a TradeStation account if you wish off our website and be ready for that. But we'll hopefully be releasing a new version in the next few days. So thank you very much, everybody, and have a good trading week, and we'll do it all again next week. Again, the time will be 9 o'clock New York time.